Hello, everybody, and welcome into another amazing market live stream here today on Monday, September 15th. Market is pretty much at all-time highs. Tesla is popping off today. The ETFs are soaring. What better day than to take a look at this market? And it's a big week as well. Fed week this week. So, Adam, a lot going on. Welcome back to the show. Great to have you on as always. I know that your ETFs have been going absolutely berserk lately. Excited to talk about that. But first off, what do you think about this market and everything that's been happening?
Well, happy Monday. It's going to be very interesting to see. The market, like you said, has been at all-time highs. When the Fed cuts, and hopefully they do cut, is it a sell the news thing or is it a rip higher? Who knows? I guess we're going to find out. But certainly the mega cap techs have continued to run. Investors are over concentrated in S&P 500 funds and QQQ funds. So if those mega cap techs, take a hit down, there's going to be a lot of hurting in the market. So, we'll have to see how the week, continues.
Yeah, definitely. It's been an interesting one here because you have some of the higher beta names are pulling back a little bit here today, but Google ripping through new all-time highs today. Tesla back over that 400 level as of last night, and then all the way up to 420 right off the bat today, up 6%. So large cap ripping, but interesting to see what happens with the Fed. Do you have any insights as to what you think is going to happen after Wednesday?
I wish I knew. I guess we're just going to all have to find out ourselves. I'd like to see the market, take a step up with a little more breath, maybe. But again, we'll have to see. My best guess, if I'm a betting man, and I'm not a good better, but I would probably see some of the mega cap names take a little bit of a breather, and some of the mid and smalls maybe take a step up. But we'll have to see.
Okay, understood. So we're talking here today for people that see the title, is Bill Ackman the next Buffett? And so Buffett's done it for a long time here, celebrated, 96 years old recently, 95?
Yeah.
Something along those lines. And so continuing to, absolutely slaughter the markets and has been doing it for forever with a lot of wisdom. Bill Ackman, a different approach than I would say Buffett has. Maybe you could actually talk to that a little bit, since I'm sure you spent a lot of time studying these guys prior to making these ETFs. What stands out to you as the differences in style between Buffett and Ackman and the similarities?
Well, I think the main difference is just the overall macro approach, right? Buffett is a kind of a value investor. He has a specific criteria around identifying companies with strong moats, and looking to get in and leg in over time, and hold those positions for a long period of time, and of course uses influence to improve operations, which is similar to Ackman, right? Ackman is known as an activist investor. He certainly takes a little more of a concentrated approach than Buffett. Buffett of course has a lot more cash to play with, of course, so maybe that's part of it. But Ackman is more of a concentrated investor. And then will use his influence at the board level to try to improve operations. And again, another similarity is a long-term, high conviction approach to investing, which is attractive for us, which is why we brought out ACKY, which is it's a nice complement to OMAH.
Absolutely. To talk about ACKY, I definitely want to get into that. Quick disclosure that I think would be good for the audience as we get into this area. We're going to be talking about some of these ETFs from Vista Shares. Investors, please, carefully consider a fund's investment objectives, the risks, the charges, and expenses prior to investing. The fund's prospectus and summary prospectus contain all that information about Vista Shares. And if you want to obtain that prospectus and summary prospectus, you can visit the website at vistashares.com. Please read those carefully prior to investing. So wanted to make sure people know that, where you can get all that information and to understand the in-depth, charges, risks, anything that's associated with these pieces as we talk about them. So let's talk about ACKY here, which is obviously relatively new. Just got published, I believe, last Tuesday. And its first week here up about 1.6%, moving to the upside. And so this is allowing people a first, right? People haven't really been able to, at least via ETF, invest like Bill Ackman. There's this idea, of course, of Pershing Square and a couple of these other items, but it's not really Bill Ackman's portfolio. So maybe you can talk a little bit about what makes Ackman's portfolio special, what you've seen from him over the years in regards to returns, and what this ETF aims to accomplish.
Sure. And look, just to kind of give some context, we launched OMAH back in March, right? And that's invest like Warren Buffett, but with 15% annual income target paid monthly. And, look, we thought it would be interesting to investors. We did our research. We went out and polled people, but it's been an extraordinary success. It's raised over $500 million in 6 months. We're actually coming out with a press release tomorrow about that. So it resonated with investors. Investors want to invest like legends, and they also like the income. So, and the interesting thing about, an OMH or an ACKY, which I'll get into, is, the portfolios are very different. I mentioned at the top about the S&P 500 and the Qs. They're very similar. Around 35% of the S&P 500 is in the top 8 to 10 mega cap names, and about 45% in the Qs. So, when people invest in those index funds, they think they're getting diversified, which they are frankly not anymore. And they need to understand that. So we're trying to bring out products that are diversifiers in that space. So when we saw OMAH do very well, we went back into the lab, we did our research. We said, well, what other type of legendary investors can we harness to, get access to their portfolio and bring another diversifier to market? So we did a research around dozens of managers. We were looking for managers that tended to have high conviction picks and have longer holding periods, which we think is important. So we're not looking for managers that, have 100 or 200 holdings that are in and out of positions daily, or have severe hedging type strategies on their long positions. We're looking for high conviction managers. So certainly Pershing Square and, Bill Ackman epitomizes that approach. That's his whole approach, right? He's an activist investor. He does his research, he gets in, he digs in, and he tries to impact operations. And just to be clear, we're not affiliated with Bill Ackman or Buffett or Pershing Square, right? So we looked at the portfolio, and the interesting thing is how interesting his portfolio, in fact, is. It's really a mix of companies that are growthy. Some of the names, he's got Amazon, he's got Google. And of course, Uber is one of his largest positions as well. But then it has a lot of names in there that we think are going to perform really well as rates come down, like Brookfield, a big investment manager, Howard Hughes, a big builder, restaurant companies like Restaurant Brands and Chipotle. As interest rates come down, those securities should benefit from that environment. So it's a growthy portfolio that should actually perform quite well as interest rates come down. And the overlap between ACKY and OMAH is minimal, as well as with the big indexes.
Yeah.
Sorry for being late, by the way. I appreciate you letting me join in. This is a very interesting one. I'm excited about. I'm already seeing some decent sized numbers here in the large holdings. So someone's already buying the ETF. But honestly, everything you're explaining there, I'm really happy to be doing this show with you, Adam, and get to do all this stuff with you. I have enjoyed watching Vista shares. Obviously, we've been working together for a good little bit here. Our goal is, or at least my goal and God's goal, is really just to shine a light on awesome products being creative. Adam's goal is here to go in and create awesome products. And if it's right for you, it's right for you. If it's not, it's not. I'm really shocked that more people didn't lean into these are the most famous investors. These are the people that have consistently beat the market. Let's create products like them, being able to invest in them. So I'm surprised this theme didn't start earlier, and I'm really happy to see it working well with OMAH. Congrats on that new milestone. So I'm surprised more people haven't jumped into this area. I bet you ACKY is going to end up picking up really, really quickly. So yeah, I am excited. We're just wow, already at 10 million basically, and I'm sure this is a little bit delayed.
Yep.
How much of that was seeding, or is that just people just really excited for this from the start?
No, we burned through the seed capital of $1 million within the first 15 minutes
Wow.
of trading on Tuesday. And we have about, I think, 6 or 7 crates that haven't cleared yet. So yeah, we'll be at probably 12 to 15 million by Tuesday. Yeah, it's extraordinary. I mean, it really, and again, thank you, to your listeners, to you guys, and all the investors that are on X who who really have embraced us. And, they're smart. They're looking for unique exposures, and they're looking for that income overlay to stack their dividends. So, we think this is a great product. And why haven't people jumped in? I mean, look, it's creative, right? I mean, it's a creative approach. We're looking at Vista Shares to create products for different market environments. We're not going to have hundreds of products. When we bring out a product, it's institutional quality. It's rigorously tested. Portfolio construction, it happens for a long time before we bring something out, and we want to bring it into the white space. We're not looking to do Me Too products, and just like on television, right? When one company has a hit court show, every single network used to have a court show, right? So it's the same thing in the ETF market. Somebody does well with something, everyone brings out the same thing. We're trying to avoid that as much as we can.
Well, what I personally like is that this is also not a very short-term thinking thing. I like that this is more of like a, I don't know if buy and hold is the correct word. Maybe it is, but it's definitely more that longer term kind of investor vehicle that I think was missing in the market. I feel like there's not much of a better launch that could happen. $12 million in an AUM after the first week. We don't have to talk about it here too much. I really want to dig more into this ETF but my guess is you are thinking to yourself, all right, we got to get the next two or three in this suite out quickly.
Well,
could there have been a better launch there? I mean, I'm curious on what your expectation was, because that's great. What's the volume been like?
Yeah, I mean, the volume was 252,000 the first day. It was 275 the second day, over 100 on the third day. So today, I think we're doing pretty well as well. We got 53,000 already in market. Only an hour and a half or hour 45 minutes in. So yeah, I mean, look, I didn't expect it. I mean, you expect ETF launches are tough. I've been in the ETF market since 2001. This is the best launch I've ever been involved with, and particularly since we're a small company. We're not iShares, where iShares brings something out and on launch day it's in their models, so they're doing hundreds of thousands of shares and driving assets.
I think that really, Adam, I really think that goes to the quality of the product here, because there is no reason that this should have done that well on the first day of trade. Well, there is a reason, obviously it's a great product, but like trading on the first day of these ETFs, is all ETFs I've watched, is so difficult. And like I was saying it, I know this is a hit. This is a hit. So I think it's also just so, it makes so much sense, and it's different. This is one of those ones that you're going to have a suite of 10 to 15 of them, and everyone's going to start making them after, and they're going to be like, damn, why don't we do this from the start? I love it.
Yeah, that would be
Sorry
great.
for interrupting you there. I'm just really excited about this one.
I appreciate it. Thank you very much. I think it has a very different pattern of performance. I mean, what we're trying to do is find portfolios that will have a very different pattern of performance than other portfolios we have. Again, so this ACKY product, you can see the performance, right? It's up 1% today, 90.9. It has a little more pop to it, which is nice. And of course, that can go on the downside as well, right? I mean, volatility works both ways. So, to Gav's point early on, you need to look under the hood of what you're buying. Don't ever buy anything for what it's labeled, because particularly in the ETF market, it's a marketing game, for a lot of these issuers, and they'll name a product something. You look under the hood and you're like, what the heck is this? This is not at all what I expected to be buying. So look under the hood, including our products, understand what you're buying, and this way you're not surprised.
Yeah, I can pull up that screen you're sharing there, Evan.
I was just digging in. I was pulling it up, and I might just look around in the background, Gav. I know I came in hot and just stole everything, so I can throw it back over to you.
No, this is perfect. I actually was going to pull up the website and pull up the holdings and just walk through the holdings for a second here so people can get an understanding of what they're actually owning within here. Adam, that top one there, is that just bonds? What is that? FGX?
That's cash for the collateralizing the options and some of the smaller holdings.
Got it. And then obviously he's a big Uber bull here, taking a pretty big bet on it. Uber's really interesting one with Tesla, right? And Uber kind of going back and forth here. I'm curious how you think about Uber.
I'm a big Uber fan. I mean, and it's interesting. I don't even own Uber myself, which, surprises me because I meant to buy it many times. But, Uber is not just rideshare, right? I mean, they're really aggressive, whether it's the Uber Eats, whether it's, they're moving into the autonomous vehicle area. And of course, they have the infrastructure and the installed base of customers to make that successful. So I think it's a very interesting company, and, they're going to be a player for a long time.
Yeah, Uber's interesting.
What do you think of what they're doing kind of together with Waymo, where they're offering Waymo through the Uber app in some of the larger areas? Curious your thoughts on that.
Yeah, I mean, it's smart, right? It's all about installed base, right? They have the installed base of customers that, it's very difficult to replicate that, which is probably why Tesla, wants to create their Tesla robotaxi using their installed base of customers that are already on their Tesla app. How do you replicate that? So Uber has millions and millions, I don't know how many millions of customers. So that gives Waymo access to these customers and, immediately, where, I don't know, it would take decades to build that and billions of dollars in marketing. So very smart on both sides.
And I'd
Yeah.
love to jump in and ask more about ACKY specifically and what we're doing here. Dav, if you want to share my screen again, I have the PowerPoint. I clicked into the fact sheet and I was just digging in. So we're buying some of the holdings. We're obviously not affiliated with Pershing Square or Bill Ackman in any way, but we're taking some of the holdings here. And what are we doing? It is a covered call strategy on top of it. How is that? I know the target here is to get a 15% yield, which breaks down to 1.25% a month. How are we getting that yield?
Yeah, correct. So this is the same exact strategy as we're running for OMAH and QUSA, our quality ETF. So it is a covered call strategy. We're writing covered calls on each holding, each one of the holdings in the portfolio, with a goal of, as you mentioned, 1.25% per month. So this is a very different type of income product than some of the other ones out there. We are targeting 15. It's in our name. That's our goal. So we're not looking to generate 1.26% or 1.24. If we do generate 1.26, we're only paying out 1.25, and the excess is being rolled back into the NAV, which is important. So we're not trying to maximize income every month. We're not cowboys waking up in the morning and playing with the options and trying to maximize the income. We're trying to, we set our options for each underlying holding to hit that 125. Once we hit it, we're out of that position. We're not holding the position, trying to squeak out a little more income and then risking having the securities called away or whatever it may be, which is different. So it's kind of it's a nice, robust earning stream for sure, but it's not aggressive the way we run it. It's all data driven. With some thoughtfulness, and every morning the team's going in and reviewing the positions, seeing what to pull off as new money comes in a new fund like this. One thing to mention is, when you have a new fund like this, you have all this new money coming in, so you got to buy more securities, which means you need more options on those securities. So if you look at our number of holdings right now, we only have 11 actual equities in the portfolio, but there's 42 holdings because the rest of the options. And that'll increase actually, because as the fund grows very quickly, we're going to need to keep adding onto those options positions.
Gotcha. Yeah, that makes sense. That makes sense. I'm curious on when you're talking about the income side of it, both ways of it. Like, why do you think people are gravitating towards this type of product with any income at all? Like, why the 15% a year is a number that people are excited about? And then also, you're kind of talking about the other side of it, where some of these other people are targeting as much as they can, or certain numbers that are higher than 15%. Why at a certain level do you think it's maybe not or at least why is it the strategy that you chose not to go with to kind of be either of those ones, no income or a lot of income? Why this? Yeah, I'm curious what you were kind of seeing when you were going to both extremes.
Yeah, I mean, our philosophy is about portfolio asset allocation, right? So we are not, our products are asset allocation products generally, right? That's number one. So if you look at the asset allocation products in the income space, they're generally in the kind of 8 to 14% range. Ones that use the Qs are a little bit higher in the 14, 13, 12. So what we went out and talked to retail investors, we talked to RAs, we talked to family offices, and we determined from that, what would be a good level of income that differentiates the product from our competitors. So 15% is higher than all the other asset allocation products out there, but it's not too high where we're going to experience that NAV erosion. And that's the key, right? We don't want NAV erosion. We want capital appreciation. So we have a dual mandate, much like the Fed, I guess, right? Our number one goal is to hit that 15% annually, paid monthly, 1.25% per month. Our second goal is capital appreciation. So we're looking to do both. And once you get to 20, 30%, the NAV erosion issue becomes more of a problem, or a challenge, I should say. 15%, we did all the testing. We, went back years looking at it, and, we were able to, capture that upside. Now, with any income product that uses options, investors should understand there's no free lunch, right? So you're not getting, you're never going to, in a raving bull market, our Ackman inspired portfolio with the options will never keep up with just the equities, long only equities without the options. That's just a fact, because you're getting that 15%. So, I always tell investors a good expectation with the 15% is, around 75% of the upside and around 85% of the downside. That should be your band. If we do better, great. But that, in terms of setting expectations, we think that's important. So the 15% seems to be resonating with people. The other products that are using the 15% are they're doing great on the NAV side. And another thing to note is that any dividends that are generated from the underlying securities are not part of that 15%. That goes back into the NAV as well. So the 15% is purely generated with the options overlay.
I gotta say, I'm looking through this filing and I got to this slide. I'm like, oh, God. I need more of the ACKY and the OMAs ETF, OMAH ETFs. That's what I'm excited for. I'm digging around in the fact sheet and the prospectus, and this one was the Target 15 investment case on the Ackman, on the ACKY one.
Yep.
So I like to see these here. I feel like this is every single time you come on here or have a show or something, we're talking about what's coming soon. No way, we can't get it through a full thing without asking that. But there's a lot of good information in this one, kind of around the strategy, the cover calls. Yeah.
Yeah, it's high level, but it gives investors some meat to dig into if they're looking to do their due diligence, which they should. And look, if ACKY keeps going the way it's going, we're going to get another one out within a few weeks, hopefully. So I'm not going to say who it is, but it's another legend.
All right, I'll let Gav go in, because in my mind goes a little bit. There's a certain MO that there's certain people who own just like thousands of stocks, and I mean, maybe you could do that if they're kind of concentrated, but that's a little difficult. Obviously, you would only pick like the top 10 or 15. So there's feels like there's a sweet spot. Have to hold it for a certain amount of time. Have to be a big enough name. Have to probably have like no more than like 60, 70 holdings, maybe 100. I don't know. I'll stop. I'll maybe come with a guest later on this one. We'll close it out. But Gav, I'll throw it back over to you.
Appreciate that. Yeah, so I mean, I think one thing that I was kind of discussing was just like the theme. When you look at Ackman's style, so he's got Uber in there, he's got Amazon, he's attracted to food brands, right? What do you see as like, yes, an activist investor, but what do you see as kind of that general overall theme that kind of ties everything together? And because investors that are investing in this are going to be investing along that, what should they know going into this beyond the 15% about the underlying holdings that they're getting exposure to and the thematic of it?
Well, I mean, Ackman's beat the S&P 500 over the last, was it 20 years, 15 years that he's been out. So his track record is incredible, and which is why he's a legend, and which is why, so many people admire him like we do. So his performance is terrific. And it's a long-term performance. So I think the equities that he holds are quality companies that he views as value value opportunities for him. But if you dig into what they are, I would call them a little more growthy generally than certainly than some of the Omaha holdings, which are more value tilted. So if you run this through a quote a Fama French model, you're going to have a little bit more of a growth tilt to his portfolio. So, and that should play out in the overall capital appreciation of the fund as well. So, I think it's a unique product. I don't know that there's any other growthy. Well, there's a couple other income ETFs out there that have a growth tilt, but certainly not at the 15%.
Yeah, no, I haven't seen too many others in that area, and I think it was good.
There's a lot of like single stock ones there, but I feel like they haven't come into the group and the basket, and then also getting it in the right format. And I also feel like how do a lot of these things update going on? Everyone's updating through market cap or other stuff like that. I like that this is through someone's thoughts and opinions, and maybe they can end up going to beat the market. Obviously, beating the market is really difficult, but someone like an Ackman, maybe he's the one who goes and does it.
Yeah, and one thing to mention, which I should have mentioned a little earlier, is how we develop the portfolio, right? So we do look at 13Fs. People say, oh, you're looking at 13Fs, there's a delay. So we rebalance the core of the portfolio quarterly when the 13Fs come out. So people say, oh, you're delayed. But that's why we pick managers who have high conviction and long holding periods. So if you look at the 13Fs, on average, if there's multiple changes throughout the year, we'll be delayed in picking up that change by 45 days. So in the scheme of Pershing Square type portfolio, 45 days is nothing, right? I mean, the market could go up or down in that period of time. So it's not like we missed out on a trade, which is important, which, Evan, to your point, is why we don't pick those managers that are in or out of hundreds of positions on a weekly basis, because you can't pick that up. So that's one thing. So it's a quarter rebalance. But the key for us is that we're an active ETF. So if we get wind that there are big changes being made intra-quarter, and when I say get wind, it needs to be an SEC filing that he passed through a certain ownership period or something like that, we can make that change intra-quarter. So we could be nimble and move with him if we get that information. And then if not, then again, we have the average 45-day delay intra-quarter on a, picking up the 13Fs. So, but, he doesn't make many changes. He did make some changes this month. This quarter, he added more Amazon. He got rid of Canadian Pacific. But, over a period of time, over a year, there are 5, 6, 7 changes maybe.
My question would be like, sometimes people are really great at picking the right companies and not getting in at the exact perfect time. Who knows? Like, I bet you it's also not a fact that getting in 45 days later does worse. Kind of what I'm saying is he likes an opportunity. Maybe he doesn't buy the exact bottom. He thinks the opportunity is done, and maybe it continues going a little bit higher. I definitely don't think it's a fact that that he will that he will necessarily outperform a 45 delayed thing.
Yeah, he's not a market timer, and frankly,
Yeah.
timing the markets is really hard. So, and we're certainly not market timers, and we're not trying to be that. So, and that's why we picked him and others like him who are not market timers, who are looking at the fundamentals and looking for a holding period of a long period of time.
So I'm guessing we won't be seeing one of these on Peter Lynch anytime soon, would be my guess.
No.
I think he's got 1,400 holdings.
That's a lot.
Yeah.
No. Hard to run an option strategy on that.
Yeah, I agree. It does give me somebody like, I'm thinking like a Michael Burry, maybe like he trades a little too much potentially. Okay, no, all right, I won't say anything.
No, Michael Burry trades way too much. It just wouldn't work. I don't know if you can answer to that, but a Michael Burry one will never work. Just in this format. So that one you can move on from. There are a couple guys who have like 20 to 30 million in there or billion that are watching them. A David Tepper, people really gravitated towards his one when it came out. The Einhorns, the Chase Colemans, the Ray Dalio, Bridgewater. I think they are kind of concentrated enough with a lot of holdings. My guess, I saw a lot of interest around Tepper this time. I also saw Howard Marks has quite a different portfolio than a lot of the other ones. I don't know his hold period, but I wonder if that one's interesting. Yeah, Carl Icahn, etc. But yeah, no, Michael Burry is a degenerate trader, and sometimes it works out, sometimes it doesn't. But Michael Burry is one of us, 100%.
I love it. Well, it seems to work for him, so that's good.
Do you think OMAH? I feel like these next couple weeks, it looks like it's about to have 500 million AUM just itself, let alone the rest of the firm.
Yeah, we passed through 500 on Friday, actually. So yeah, that one's crushing it. So yeah, it keeps going. I mean, it's paying out its monthly number, consistently, and the performance has been good. I mean, Berkshire has had a tough run, really since April-ish, kind of just, again, the value tilt, once the tariff tantrums, we got out of that, we went right back into a momentum driven market. The mega cap tech took off, except for Apple, which was his, biggest holding. So, Berkshire has had a tough run, versus how it's done in the past, which only means maybe it's a coiled spring ready to come back. So OMAH has actually outperformed BRKB, which is, not necessarily what we're trying to achieve, but it's interesting. So
That's funny.
yeah. And then, a week from this Friday is declaration day for all of our target 15s, ACKY, Omaha, and QUSA. So that'll be interesting. That always gets the trading volume pumped up as well, which is fun to watch.
I know that there's this huge community that's always out there tweeting and talking about OMH. Have you seen them take on ACKY as well?
Yeah, I mean, it's great. It's what a great bunch of people on X. I mean, yeah, they jump right on it. They've really embraced it. I see the ticker going across my feed constantly now, which is amazing to see. Obviously, as the CEO of an ETF company, it's exactly what you want to see. But they've really embraced us, which is really nice, and we're very thankful for that, because without the X community, frankly, I don't know where we'd be, because in the old days, my last company I started in 2006, I sold it in 2015, ETF company. There was social media, but it wasn't like today. So, it took a long time to get trading volume going on these products. And, if you didn't do it in a certain amount of time, the product was deemed dead, even though it wasn't. It might have been because, the RAs, the family offices, take a longer time to jump in. And, the retail investors are smart. They jump in when they look at the portfolio. They understand that if they trust the issuer based on a track record with other products, and then they like it, they'll try it out. They'll drip in on a weekly basis, which is nice.
Do you talk with RAs about products like OMH? Are you getting calls, reaching out, anything like that?
Yeah, I mean, we have a sales team that focuses on RIAs. So, we're doing all of our stuff on social media, but then we also have a small sales team that is targeting, RIAs. So, probably half of our assets are probably with RIAs now, and half directly with the retail.
What type of questions do you get from them?
They want the same. They want to know the same thing as the retail investors. Really, they want to see, can you pay out that 1.25% per month? And I think we've proven that we can across our products. They want to understand the portfolio. They want to understand the rebalance. They want to understand the option strategy. It's really the same exact questions. I mean, today's retail investor is really smart. I mean, when I was, 25 years old, I was not so smart. I was looking for, buy the next, whatever I thought was going to triple in price and lose all my money. I mean, today's retail investors are, they're very analytical. You could just see from the content on X, they're doing the analysis, and they're dripping in, over time to take advantage of the gyrations in the market. So they're asking a lot of the same questions, as the RIAs.
Do they ask you about NAV erosion and pieces like that, which I know are a big focus for retail?
Big time as well. And that's again why we chose the 15%. In talking to these RAs and family offices and retail investors, what's most important to you, and NAV erosion was top of the list. So you got to make sure you're performing. If you can't overpromise and underdeliver. Now, I can never say that we'll never have NAV erosion. I mean, a dividend strategy by definition is going to erode the NAV every time the dividend's paid out, right? When you go ex dividend, the NAV goes down for the amount of the dividend. The key is you need to have your option strategy not drown out your ability to generate upside capture. And that's where the magic is, in constructing the product and finding the right portfolio to base the product on.
I won't hold you to this.
Uh-oh.
But if ACKY hits 100 million within whatever period of time, I want the next ETF to not just be whatever one. I want a regular ACKY ETF. I want no options income on it. I want to see how that does. Because I'm sitting here thinking, like, I don't know, not affiliated with Bill Ackman, Pershing Square in any way, not at all. But like, they're probably charging X amount. I'd rather have a 45-day delay than pay that certain amount. To me, that's a very interesting concept.
Well, it's interesting that you mentioned that. So our next, assuming ACKY does well, I want to see how it does this week. If we go to 20 million or something like that, we'll pull the trigger. The question will be whether we do another legend with income or an Ackman without income. And maybe we do
I think the
both.
Ackman without. I think it without. Yeah, the answer is both. The answer is both. But I think that there's something there that like, listen, you're giving up the 45 days, whatever it is, for the 13F filings for the amount of fees versus what the fees you're paying on this and stuff. I think the math would math out personally. I obviously have to go in and dig it out and feel it and see everything, and who knows like where if the fee structure would be exactly the same on an income one versus a non-income one. I don't
No, we
know.
would drop the fee. We would drop the fee. The
Yeah.
management, yeah, we would drop that down from where it is on the income.
I don't know. I think that's actually a very interesting concept. I'm excited about. This whole suite just gets me excited, and it's when I'm sitting here thinking like, wow, I'm surprised more people haven't done this type of thing. Um, yeah, you're playing in the right area.
Nice. Well, we're
We're
gonna
not keeping it a secret for too long though, so
yeah.
moving quick.
Well, that's why we got to get critical mass before somebody else jumps in. But yeah, I mean, I'm going to do a poll over the next few days, assuming ACKY continues to grow as it is, and I'll line up both products: the other Legend with the income and the Ackman without the income, and we'll see how the poll, what people think.
I'm curious, is there any way to protect like intellectual IP or concepts of ETFs in the ETF world?
It's so easy just to change something. I mean, we trademark Target 15, so no one's hopefully going to use that. But it's hard to, people can change. We have a patent filed on our AIS methodology, our bill of materials methodology. We did file a patent on that. But you know how patents work, right? I mean, people can look at it and change 2 or 3 little things and say, oh, it's not the same. It's hard with intellectual property.
Target 16.
Yeah, well, yeah, they can go Target 14 or Target 16, and we can't do anything about it. So there's that, right? But I think the only way to protect yourself is to be successful, and because it would be tough for somebody to launch another OMAH right now because we're already at critical mass with that.
For sure. Evan, do you have any other questions on ACKY? I want to briefly touch on a couple of the other ETFs.
No, I think we can keep it moving. Obviously, I'm very excited about that one. I think it's a very smart idea. And when we're thinking when you're that last comment you're bringing up, it really is like, hey, if this is even for a trading product or investing one, if it's the one you use first and it does a good job, then just doing something the same won't get people over. Doing something slightly better probably won't get people over. You have to create just a really great product that it comes in and it's a no doubt version of this. So, and if that happens, then I'm sure Adam's like, yeah, listen, well, we'll figure it out. We'll adapt that, or we'll even make the best one. But clearly, this is working right now. This is what that better version of it is. But I think that's kind of what it is. Is once you kind of get to that critical mass, it's going to be the one that people are using. And obviously, we're striving here to create really great products. If someone comes in and creates the end all be all concept, we'll play around in it. But
Yeah,
I mean,
I agree.
Adam, clearly what I'm sitting here saying again for the 5th time, like, hey, I'm surprised more people aren't doing this. My guess is Adam's the one who's going to be breaking into it first. You probably already have a couple ideas in there that you're like, all right, where's the next like direction of type of ETF?
Mm-hmm.
So
yeah, we've got a lot of stuff that we just popped in a filing on Friday.
Where do these get filed? Do they get filed to Edgar?
Yep. You
Okay.
can pull them right up. So, yeah, I mean, look, when you go for the white space and try to be creative, I mean, again, we're creative, but it's all through research. We're talking to people about it, but it doesn't mean it's going to be successful, right? So, still 1 out of 10, 2 out of 10 maybe are going to be successful, and you're going to flop on the rest. It's just the nature of the business. ETF market is like movies, right? It's a hits business. So sometimes they hit, sometimes they flop, and you just gotta. Doesn't mean
every once in a while, Adam, the sequel's better than the first one.
That's true.
Very rarely is the 3rd one better than the first 2, but you never know. I'm excited to see what's next.
Well, thank you. Appreciate it.
No, that's okay. Yeah, sorry. Continue to the movie reference, but yeah.
Quick question. I know that when it comes to a lot of these cover call strategies, people like to know that the options are, subject to those lower 60/40 tax rates. I'm curious. I think that's Section 1256 contracts. Is that applicable to what you're doing?
They are not, because that is index based.
Okay, so that's what I thought. Yeah.
When you have an index based option, you get that specific tax rate. Now we will have products that do capture that, but this does not. So, we try to get as much, manage it as tax efficiently as possible, maximize the ROC from a tax perspective on a monthly basis. And so that's the best we can do. And we've done a very good job so far, but, we'll have to just keep doing it.
Got it. Okay. I want to use.
Who is the
Yep.
Who is the one actually doing the trading of the calls and stuff like that, the cover calls?
Yeah, we have a
I guess trading
team.
might be a strong word, but yeah.
Yeah, we have a trading team that runs about, I think, 15 to 18 billion of these strategies already. So people, and very experienced, best in the business, and they run the strategy, and we consult with them daily, of course, because it's our product and we need to make sure everything's being done properly. And they're great. They're spectacular what they do.
Love it. I want to touch real quick on a few of their ETFs just because they're doing really well. So WILD is one that I think people should be paying attention to if they haven't already. We've talked about it on the show. Me and you talked about it the first day that it came out, and a couple of the price points. So I talked about that first day. It was trading around 1750 when we got on, and it is now up to 2856 at the moment. It is up 41% on the year. Wild is taking 5 of the most popular double leverage stock names, and then taking the underlying stocks, grouping the 5 of them together into an ETF, and then 2x leveraging that to the upside. So you get basically a group of the most popular double leverage stocks. Pretty incredible the price performance that this one has seen. So that move from really the bottom is over 50% at this point. And unlike the others, this one has caught less of the steam of retail and advisors, right, with in terms of AUM, but has kind of the best performance here. So curious to hear what you make of that.
Yeah, I mean, I'm surprised it hasn't gotten more love, given just the overall concept. But here's the thing: at the end of the day, it's not as intuitive as retail traders are buying double X levered Tesla. They're buying double X levered Netflix, and they know exactly what they're getting. And they're going to make a bet on Tesla. And they buy the double X levered ETF. So that's very simple to understand. This is one step removed from that. So we do the analysis of all the double levered ETFs out there. We see where the money is going. So where are investors putting their money? And then monthly, what we're doing is we're rotating the portfolio to those double levered names that are capturing the most assets, because it's the wisdom of the crowds. It's investor sentiment. Where are the narratives driving stock prices? So, and it's worked beautifully. It's worked exactly as we hoped it would. Now, we're not buying the double levered ETFs, just to be clear, as you mentioned, God, we're buying the underlying securities. We're using the double levered ETFs as data points. So if we see all the double levered Tesla products driving billions, or NVIDIA's, or whatever it may be, we're choosing the top 5. And, we rotate monthly. So the next rotation is on the 29th, I think. It's a Monday. And so who knows what's going to be in it. But, we all know that narratives drive stock performance these days, right? And frankly, traders are smart as a group. Now, of course, you're an individual trader. You make a bet on Tesla, you could get it right, or that could be the wrong day to do it and you get your face ripped off. So that's why this is a better solution. This is an institutional way of getting high beta exposure. This is exactly, or at least, very similar to what institutions do. They capture high beta. They're taking a basket of names. They don't want to take the risk on one. They'll take a basket of names based on their own methodology. And our methodology is based on capturing investor sentiment.
Understood. Yeah, it's really been just ripping to the upside. I agree with you. I think it's a little harder for retail to wrap their heads around. For me, I think that the issue for some of them is they look at double leverage ETFs as trading tools, right? Which they are. And they look at, indexes that have multiple assets in them as long-term investing tools typically. And so this kind of is somewhere in between those two, where people say, all right, well, I understand on a double leverage, stock, I can use it to trade around Tesla earnings, right? Or a Tesla catalyst. But when there's like a group of 5, they're like, can I trade around a catalyst? Is it more of a general market trading tool? So I think for people, it's just figuring out where it fits into their portfolio.
I agree. I agree. So we have patience. I mean, this thing is, we're going to keep going, keep marketing it, because, I think as people start seeing what the performance looks like, I mean, we're up 11% on Friday. That was crazy. Today we're up 4.5%. Now, of course, tomorrow it can go down 10, depending on what the market does. But, it's been it's done exactly what we hoped it would do.
Got it. And then a couple
Before we
others that
move
are
on,
really, yeah.
we know what I'm going to say here. Once the regular non-income Ackman is at 100 and the income one is at 250, the target 15, I want a 2x one. To give me the 2x Ackman, I don't love that I think it would work, but I genuinely think that would actually work too. The ACKY suite.
I'll take a note on it.
So the other ETF I wanted to make sure we touch on that's kind of doing the reach for the sky position is what I call it, is AIS. And this one has just been going absolutely berserk. I'm really happy that we've talked a lot about AIS on our shows and given a lot of people an opportunity to research this and potentially get exposure to it. It continues to grow. It's not near OMA, but 43 million AUM is nothing to scoff at on a name like this. And on the year now, up almost 40% after being down 25% at one point, right? And if you look at it, and we were talking about this even in the depths, it has gone from those depths and it is up over 90% from them. So amazing growth to the upside. The names in here just stay super quality. For anybody that's bullish on this AI theme, this is just probably the best performing AI ETF that I've seen. I'm trying
The
to think
concept
of
with
those.
AIS is the kind of picks and shovels of it, right? We're going through right now. Every single headline I read is about how many more data centers and stuff like that we're building.
Yep.
And right, so yeah, I'd be curious to hear just quickly more about that strategy. But that's what I love about it is like where I feel like we are in this AI build out, the first, second inning, what types of names work there. I think it aligns with the concept you were going for, and it's that picks and shovels play, correct?
Exactly. And to your point on the assets, by tomorrow or the next day, it'll be over 50 million because we got a bunch of
Wow.
creation this week. So, which is nice, which is a nice key threshold. But yeah, so this product was designed by John McNeil, who's my partner. John was the president of Tesla. He was the chief operating officer of Lyft. He's on the board of General Motors. He's the vice chairman of their autonomous vehicle division. He's a guru. He's a brilliant technologist and businessman. This is about, when I mentioned look under the hood of what you're getting. If you look under the hood of your typical ETF that says they're an AI ETF, they're not an AI ETF. They are, they own, Salesforce and Netflix and, the hyperscalers. Now, if you want to get access to AI exposure, you got to follow the money. Just like with Wild, you're following the money, right? So when Microsoft says they're going to invest $100 billion in AI, what that means is that they're investing in building data centers and semiconductors. So what we did here, to your point, Evan, about the picks and shovels, we did an analysis around the supply chains. What goes into building a data center? What goes into building a semiconductor? We map that out. We overlay the bill of materials, meaning how much. So now that we have the supply chain, how much of a data center cost goes into, cooling systems or racking systems or fiber optic cable or things like that. So once we've done that, then we build our portfolio. And this is also an active ETF. So we have a portfolio of around 56 companies that are many companies that most people don't invest in, right? I mean, we do have NVIDIA, we have some big names that but a lot of names that you don't know. Vertiv Holdings, GE Vernova, those are hot companies now, but they weren't when we put them in. SK Hynix, most people don't invest in that because they can't get access to it because they're buying it to sell equity. So, it's the companies that are soaking up all the CapEx being deployed by Google and Meta and Microsoft and all these companies. And it's just a very different approach. It's pure AI. Our investment committee is not only John McNeil, but this guy, Sunny Madra. Sunny's the president of Grok, which is one of the most important privately owned AI companies in the world. He was literally just at the White House at that big table with Tim Cook and Sergey Brin and all those guys talking about AI and the future of AI. So he has a seat at that table. So, these are the type of people that are overseeing the portfolio, which we think is important in AI, which is moving so quickly.
Yeah, it's actually really interesting. The only place that I found that retail investors can easily get exposure to SK Hynix has been through here. I haven't really seen it in anything else. And I was sharing the chart there for those who, haven't seen this yet. And this is just an incredible chart, right? It's up over 90% year to date. It's absolutely surged over the last month, up 20%, last half a year up 61%. You've held steady with the position. Another one in here that I don't think people are paying attention to. This is your second largest holding here is MU, right? People can see MU has just absolutely gone berserk since the April lows, especially, right? In that time period, it is up almost 150%. It's basically just not putting in any red days lately. People can look on this chart right here. Just look at the daily, right? It's just gone from 114 to 157 straight. And this is super bullish to me. It just broke the highs from back in 2024. So to me, this definitely doesn't look like something that's a bearish chart. And you go back right over time, pretty much looks like it's pushing all-time highs today at this moment. So it really, really, really is an interesting ETF here. And you look at the weekly chart on, AIS, and it's actually going crazy as well here. So a couple of ones that I just can't stop looking at. One that does stand out to me that's interesting is the Foxconn Industrial Internet. Maybe if you could talk about that one a little bit.
Yeah, you know what? That came out of nowhere. That I'd like to see the chart on that, and that was below our top 10. And they are key to producing the semiconductor infrastructure that's required to that's needed in the United States, and they're making big investments in the United States as well. So I'm sure the administration, and I don't know exactly what their deals are, but I'm sure they're looked kindly at, even though they're a Chinese domicile or Hong Kong domicile company.
I think I have the correct one here. I'm not 100% sure. Let me see, because I believe that this is the correct chart. It's this one right here. This Foxconn Industrial Internet Co. Ltd. And like you said, Chinese. This one looks like it's up 190% year to date.
Yeah.
Looks like it did not even have much of a dip in April, right? Dropped from about this is in the Chinese yen right now on the screen. So ignore, for all intents and purposes, anything that is an amount there, but you can see the percentage is going to remain true here. And it's just absolutely ripped over the last 6 months, 33% over the last month, even just the past week, up 16%. So everything that's in the top of this one, which are not common names, like you mentioned, there are some common names. Taiwan Semi, which has also been a great hold. It's up 100% since the April lows. NVIDIA continues to rip. But the other names, and then Vertiv and G Veranova, really, I think most people who are AI savants would probably closely know, NVIDIA, AMD, and TSM, and then most people would know MU, and then I don't think too many people are just going to know the other names that are in the 6 top names in here, which are honestly carrying most of it.
I mean, because they're behind the scenes. They're the boring industrial companies that are soaking up hundreds of billions of dollars in CapEx and making tons of money. I mean, Microsoft, for instance, people say, oh, Microsoft is an AI company. Microsoft will be an AI company, but, they're not making money on AI, right? I mean, or at least not enough money to have really impact their financials at this point. Their whole point is that they want to invest in the infrastructure so that one day they can have consumer applications that are powerful enough and useful enough where they can make money. And that's where we are in the cycle. And we're going to be there for the next 3 to 5 years. Now, in 5 years from now, if all of the money is now in the consumer applications, AIS will pivot. And, we'll have a new supply chain in there of all the consumer applications. So, and that's the beauty of having an active strategy on top of a rules-based core. The rules-based is so everyone knows what we're buying and why we're buying it, but the active is to stay nimble.
Absolutely. Really fun hour here. Ran by. For those that were listening, we love working together with Adam and together with Vista Shares. I shared some information earlier that I encourage everybody, to go read, of course, check out the prospectus. It's on vistashares.com. Really understand the risks, charges, expenses, objective, and everything along those lines prior to investing, because it's the best way to do it that way, because then you can actually have conviction as well, right, in what you're investing in, or decide if it's not for you. And so with that being said, we ran through ACKY, which is the new ACKY ETF, OMAH, which is hitting 500 million AUM here, and AIS and Wild. We didn't really hit on QUSA, but encourage people to check that out as well when they have a chance. Adam, any final comments you want to share on this one today?
Hey, no, thank you very much. And thank you to all your viewers and listeners and audience. Without you guys, we'd be nowhere. So just thank you very much. Hit me up on X. I love answering questions. You can DM me, you could just post, comment on my posts, and I try to answer as many as I can because, you guys know your stuff, and I appreciate your support.
Thanks, Adam. Evan, anything else for you?
No, sir. I am good. I appreciate the live stream as always. I enjoyed it.
Yeah, this was fun. A lot of good stuff. I saw around, I think, about 8,000 people tuned in. Appreciate everybody that watched. We will be back with more content. And of course, I encourage everybody to go jump on the spaces, which will continue.